Hello, Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, thank you for joining these presentations. So in these occasions, Titis Fatarina Mafira, I'm excited to share the results of our research titled ESG and Capital Structure Dynamics, examining the moderating effect of CEO characteristics. So this study is the outcome of an international collaboration grant from LPPM UNJ in 2025, and it has been presented also at the International Research Conference of Management and Business 2025. Our research team includes uh, Professor Herman, Profesor Suherman, me, Titis Fatarina Mahfira, and Monica Dewi from Universitas Negeri Jakarta. Also, Mr. Berto Usman from Universitas Bengkulu and Mr. Omer Faruk Rensper from Gaziantep University, Turkey. So in this presentation, I will walk you through the key aspect of our study, including the introduction, objectives, methodology, findings, and implications. So let's begin. So the the ESG factors have evolved from mere corporate social responsibility to critical indicators of company performance and sustainability. And there is growing demand from investors and stakeholders for transparency and the integration of ESG into corporate strategies. And ESG influence a company's capital structure, which is the mix of debt and equity, which impacts the profitability, the financial risk, and overall firm value. The companies with higher ESG scores are often perceived as lower risk, leading to reduced capital costs, as supported uh, by Friede et al. 2015. Okay, however, the academic debates show mixed findings. Some studies indicate lower leverage for ESG focused firms, and others suggest also higher leverage due to better access to funding. The CEO characteristics, such as gender, age, and tenure, play a moderating role in capital structure decisions. The female CEOs tend to be more risk averse, leading to lower leverage. The younger CEOs are more aggressive with that, while older ones are conservative. And the experienced CEOs with longer tenure make stable decisions, whereas the new CEOs face the credibility challenge. And understanding how the CEO characteristics moderate the ESG capital structure relationships is essential, for sustainable financial strategies, and provides valuable academic and also practical insight. So the primary objective of this study is to explore the moderating role of CEO characteristics in the relationship between the ESG and capital structure. Specifically, we investigate whether ESG influence the capital structure and how the CEO attributes such as gender, age, and tenure moderate this relationship. So the contribution, the research contribution. This research introduced novelty by examining CEO characteristics, which is gender, age, and tenure as moderating factors in the ESG capital structure link, integrating a managerial perspectives not fully explored in prior studies. And unlike previous research that focused only on direct relationship, our study provides new insight into how executive leadership influence ESG's impact on the financial decisions. And the study using panel data, we identify long-term patterns and specific effects of the ESG and CEO characteristics on the capital structure policies. And our findings enrich academics literature and offer practical implication for financial managers and investors in developing sustainable strategies. Our hypothesis, we have four hypotheses. The hypothesis one, the ESG score is related to the firm's capital structure. And hypothesis 2A, is the relationship between ESG score and the capital structure is stronger in firms with female CEO. The H to B, the hypothesis to be, is the relationship between ESG score and capital structure is affected by CEO age. And the last one, the relationship between ESG score and capital structure is affected by CEO tenure. So the populations and sample, the population includes all publicly listed companies on the Indonesian Stock Exchange from 2012 to 2022. The initial sample is 825 public listed companies. We exclude 70 firms with incomplete data, and final sample is 755 firms, and resulting 1,344 total observations. Yeah, which is this is unbalanced panel data. Okay. And the model examines the impact of ESG on the capital structure and moderated by the CEO characteristics with control variables and also fixed effect of the industry and year. And dependent variables, we have for measurement of the capital structure, which is debt to asset ratio, debt to equity ratio, short-term debt to total assets, and also long-term debt to total assets, which is the independent variable is the ESG disclosure score, and the moderating variable is CO female, COH, and SCO tenure. And the control variables are ROAs, or return on asset, firm size, and also firm age. And we also control the industry fixed effect, year fixed effect, and the clustered standard errors. So this is the key definitions of the variables. And this is the descriptive statistics based on our data, 1,344 observations. So we can see that the mean and the standard deviation of each variables and the correlation matrix. So the correlation matrix indicate that the coefficients of correlation, all of them is less than 0.7. So it indicates that there is no multicollinearity issues in this research. And for the main analysis, the regression result for the direct effect, we can see here that the ESG positively impacts debt, yeah, debt to equity ratio, yeah, with the coefficient is 0.6051, yeah, which is significant at the 1% alpha, indicating better ESG leads to higher debt financing access. And ESG has no significant effect on the debt to asset ratio and to short-term debt to asset and the long-term to debt. Yeah, there is no significant effect. And this female CEO have a negatively impacts on the short-term to debt to asset, which the coefficient is minus 0.0199, and its significance level at 5%. And it's showing that the female CEOs reduce the short-term debt. And also the CEO age positively impacts the short-term debt to asset with the coefficient 0.0011, and with the significance level is 5%. And The control variables, ROA, have the negative impacts to debt to asset ratio, short term to debt to asset, and the long term debt to asset, and the size have positively impacts on the long term debt to asset. Okay, then for the interaction terms, reveal the moderating effects that the ESG and CEO female, it's negatively impact the short-term debt ratio, short-term debt to asset ratio with the coefficient minus 0.0454 and the significant level in 5%, and it's confirming that female CEOs weaken the ESG short-term debt to asset link by being risk averse. And the ESG and COH, it's positively impact the short-term debt to asset with the coefficient of 0.0025 and the significance level is 1%. And it's indicating that older CEOs increase the short-term debt use. For the ESG CO tenure, it shows no significant moderating effect. And the other variables remain consistent with the main analysis. And we also do the robustness test, which is we use the robustness test with the lag variable, lag one variable for lag variables, one period. And it confirmed the main findings. Yeah, it is showed that the ESG positively impacts the debt to equity ratio. And for the interactions, yeah, sorry. For the interaction, the lag interaction is also show that the ESGCO female have negative impacts on the short term debt to asset, and also the ESG COH have positive impacts to the short term debt to asset, and this result is um robust. It support the main result. Yeah, it's ensuring the reliability of the result. Well, the ESG positively influence debt to equity ratio, and it's suggesting better ESG enables greater debt access. And in moderating analysis, ESG negatively impacts the short-term debt to asset, and this is weakened by the female CEOs, which is they are more risk averse, and strengthened by older CEOs, which is they are more confident in debt use. And the CO tenure, it has no significant moderating effect. And overall, the ESG and the CO characteristics jointly shape capital structure with implication for risk management. So this study is also have a limitation, yeah, which is the data scope is limited to the IDX listed companies, and it potentially reducing the generalizability, and the ESG score may not capture all the qualitative sustainability aspects, and only three CEO characteristics examined in this study. We don't include the education culture, yeah, which is maybe, yeah, which is this possibly could influence the decisions, and also the time frame is only until 2022, and it's possibly mispose 2022 ESG trends. Okay, and the implications for companies uh, integrate ESG with financing strategies, and also considers the CEO diversity and experience in appointments. For investors, use ESG scores and CEO profiles for better risk assessment and investment choices. For policymaker, uh, uh, promote ESG disclosures and leadership diversity for sustainable financing. For academics, can explore the additional moderators and cross-country studies. Okay, thank you for your attention. This research highlights the interplay between ESG capital structure and CEO leaderships. So, this is the end of our presentation. Thank you. Assalamualaikum warahmatullahi wabarakatuh.